To the average trader or investor, Solana's price action probably looks completely dormant right now. After crashing from the September 18, 2025 high at 253.66 down into the February 7, 2026 low at 67.80, most traders would probably conclude that since February 2026, Solana has gone nowhere for several months. But like many crypto price action structures right now, there is actually something much more interesting developing underneath the surface. And in this Solana crypto trading technical analysis breakdown, we are going to reveal the market structure we are currently seeing, because the chart is starting to tell us a very different story. Before we go any further, though, we are going to completely ignore the large spike candle from March 13th because it appears to be bad data. Once we remove that distortion from the chart, the underlying structure becomes much cleaner and much easier to interpret. At first glance, there is no doubt Solana has largely been traveling sideways since February. But this is where deeper technical analysis becomes important. We start by applying our proprietary price action tools, specifically the pivot highs and pivot lows, and we immediately notice, first, we had a low on April 2nd, 76.92, then a pivot high on 17th April, 90.7. Sellers then reasserted their control, but instead of collapsing into fresh lows, the market established a higher pivot low on April 29th at 81.55. That higher low then became the foundation for the next expansion leg higher. Solana then rallied aggressively into the May 11th high at 98.22, creating another higher high within the structure. That higher lows and higher highs puts Solana in an uptrend. We want to just rewind. That high on May 11th high was significant because that rally did not simply move higher randomly. It actually broke above three separate structural highs: March 16th at 97.33, March 25th at 93.16, and April 17th at 90.71. That matters because markets reclaim shift in price comes from reclaiming lost ground. And when price breaks multiple swing highs while simultaneously defending higher lows underneath price, this signals that the broader market structure is quietly strengthening underneath the surface. After the May 11th high, we entered a deep corrective rotation lower. Initially, many traders probably assumed this was simply another bearish continuation move developing. Once we layer on our Fibonacci support tools, something important immediately stands out. Solana is currently finding support directly inside the Fibonacci reaction zone between 81.57 and 81.62. This now becomes the key support region bulls need to defend. And this is where subtle price action behavior becomes extremely important, because strong markets often reveal themselves not during rallies, but during pullbacks. So suddenly, this market does not look quite so dormant anymore. There's a fair bit of activity that many traders overlook. To really understand the bigger picture, we need to zoom out slightly. The first major thing that stands out on the higher time frame chart is where Solana is trading relative to the yearly range. At the moment, price is still trading within roughly the bottom 10% of the yearly range. We know this because the purple dotted line represents the 2026 yearly midpoint, and Solana still remains beneath that level. So despite the improving short-term structure, the market is still positioned relatively low within the broader yearly range environment. The next major observation is of more significance. March, April, and May price action all remain trapped inside the February range. February's price action is engulfing all subsequent bars, and we call this a dominant range. Why dominant range? It simply means one large range structure is overpowering and controlling all subsequent price action. And right now, February continues dominating Solana's structure. So what are the price levels we need to watch? First, there's the dominant range, the February high at 106.66 and the February low at 67.80. We need to watch carefully how buyers and sellers negotiate the midpoint at 87.23. The midpoint currently acts as the balance point of the Solana market. If price trades above the midpoint, bulls generally maintain structural control. Below the midpoint, bears generally maintain control. We do know that Fibonacci support underneath is holding, and the short-term picture is producing a market structure of higher highs and higher lows. And although Solana currently remains marginally beneath the dominant range midpoint, the last 3 bullish candles are actively challenging that resistance area. So, with all of this, the Solana market is not just sleeping, flat, or dormant. That is price activity, as we explained. So here's our roadmap, so things are clearer. On the downside, if Solana loses the Fibonacci support zone between 81.57 and 81.62, then the probability increases that price rotates back towards the structural February low near 67.80. That would suggest the current recovery structure has failed. However, if buyers continue defending Fibonacci support and successfully reclaim the dominant range midpoint at 87.23, then the market can begin challenging the May 11th high at 98.22 once again. And remember, the broader structure is already beginning to produce higher highs and higher lows. So, structurally, the line of least resistance is gradually beginning to shift towards the upside. If Solana eventually breaks above the May 11th high, then the next major target becomes the February 1st high at 106.66, a level that has controlled the market for almost 4 months. One final layer we would like to add. If we add to the chart the 2026 anchored VWAP, which essentially represents the average traded price for the year, it currently sits near the 102 region. That level could become a magnet drawing price up, a resistance should it reach there, or support should it break above. The anchored VWAP sits at $102, so this is definitely another level traders to monitor closely going forward. Solana may appear quiet on the surface, but underneath that compression, the market structure is showing signs of recovery, and the next several weeks could become very important for Solana's larger directional move. We hope this video has helped you. Before you go, join our free daily crypto trading newsletter. It's just a 5-minute read, and it will keep you ahead of what's moving in the market. The link is above and in the description. If you found this analysis useful, subscribe to Crypto Trading Mastery and hit the notification bell so you don't miss our next daily video. Thanks for watching, and we'll see you in the next one.